Good morning and welcome to the Killik & Co Market Update. It's been a busy week on the data front and US earnings season is in full swing with the majority of S&P 500 constituents due to report in the coming weeks. UK GDP data was released earlier in the week. The economy expanded by 0.5%, which was ahead of expectations of flat growth, and the economy remains well above pre-pandemic levels, as you can see in this chart. The services, manufacturing and construction sectors all made strong contributions to the rebounding growth after the prior month's decline. The weak point, however, was consumer-facing services, which includes retail, hospitality and entertainment. As you can see in this chart, consumer-facing services have not yet surpassed pre-pandemic levels, and close attention will need to be paid to retail sales data in the coming months, given the sector's important contribution to overall GDP. Data from the British Retail Consortium was also released this week. It reflected a notable weakness in discretionary spending habits and a broader shift in consumer behaviour towards cheaper brands as household incomes are increasingly squeezed by the high cost of living. Over in the US, consumer and producer price inflation data exceeded expectations in the month of June. This weighed on the market as prices accelerated over 9% from a year earlier, as you can see in this chart. President Biden quickly reacted by stating that inflation is running too high, although he did point out that the data did not take account of the substantial decline in energy prices since June, which may well contribute to moderating inflation data in the coming months. The inflation numbers serve to reinforce expectations that the Federal Reserve will continue to hike rates aggressively through the course of the year. The US dollar has continued its impressive run, and the dollar index, which measures the dollar against the currencies of a group of major trading partners, is currently near its 20-year high, as you can see in this chart. A strong dollar benefits US companies which import goods from abroad, but it does pose a headwind for companies which generate a large proportion of their revenues from overseas. In conjunction with weaker demand from China due to renewed pandemic restrictions, the strength of the dollar has also contributed to the recent weakness in commodity prices. Oil prices have fallen below $100 a barrel, and copper is currently at a 20-month low. US earnings season has commenced and the majority of S&P 500 constituents are due to report in the coming weeks. Corporate profits are expected to have increased by over 4% in the second quarter. This is below the 5-year average growth rate of around 15%, but it is important to note that the S&P 500 is trading at a material discount to the average 5-year price earnings valuation. JP Morgan and Morgan Stanley both reported yesterday. JP Morgan missed profit expectations as a strong performance of the trading division and the higher returns generated by lending activity were not sufficient to offset the weakness in the investment banking division, as global deal-making has slumped this year following record M&A activity in 2021. Finally, moving to the earnings calendar, United Health will be reporting this afternoon, and we have a busy schedule of results next week, starting with Goldman Sachs and IBM on Monday. That's all from us this week. If you have any questions or comments on today's update, please do get in touch with us by emailing info@killik.com. Have a great weekend and we'll see you soon.